If you can hear my voice and see my screen, please type Y, and we'll get cracking. Yep, okay, we're all set. So, first things first, just to say I'm very happy to say this week, guys, we're going to have a much busier week on the data front, especially towards the end of this week, and I'm going to talk about that in a moment when I look at the week ahead. But first things first, let's talk about what's happened, and really the main piece of news to catch up on since Friday, if you did miss Friday, was of course the US non-farm payrolls result. So interesting data, and as you can quite often get, a bit of a mix, to be honest, but certainly the data that stole the show here was the average hourly earnings. Now, why was the average hourly earnings so important related to the rest of the data? Well, we've obviously had the hurricane. Data has been distorted in the US. Let me just transition my screen here so you can see what I'm looking at. On the Bloomberg feed, yeah, data's been distorted in the US on the unemployment rate as a result of the hurricane. So we weren't expecting great data by any means, and we didn't get great data on the headline. We're expecting a consensus of 0 to 140,000 jobs being created. Actually, it came out as minus 33,000, so very disappointing in terms of the headline, but we were expecting a disappointing headline figure. What was more interesting, perhaps, was the fact that the average hourly earnings month-on-month change prior was only 0.1. The revised prior was then 0.2. So this is the sort of range that we've been talking about. The market was looking for 0.3, and actually we got 0.5% average hourly earnings out of the US. So why was this so important? Well, it's so important because it's all about the Fed. When we look at US data like this, when we look at what US data is going to do to the markets, it's not necessarily whether it's going to change growth, whether it's going to change unemployment headline. It's about how it's going to change the Fed's mind. And the Fed have been waiting for inflation. The one thing that has been a conundrum to Janet Yellen is the fact there has been a lack of inflation ever since the financial crisis. So the fact we're starting to get some wage inflation come through could allow the Fed to turn more hawkish, and could allow them to argue the point that certainly an interest rate hike in December is likely, and then a more aggressive cycle in 2018 and a return to normalization is also viable. However, it's not as easy as you think, as always with non-farm payrolls, because that headline of minus 33,000 was poor, absolutely. Secondly, that average hourly earnings, I think Vas pointed this out on Friday, that perhaps one of the reasons why it's 0.5% is when you get something like a hurricane or a natural disaster that impacts jobs, is it the fact that it's the lower paid jobs that get taken out of the question, and therefore the higher paid jobs, or those jobs that receive more of a boost in their compensation, create a larger majority of the group that's being surveyed or assessed, and therefore is that figure itself skewed? So a bit of a mess, and that's really reflected in what happened here across the assets. So you see with the euro dollar, we started off with a slight blip to the pivot as the headline impacted the markets in the first 1 second after the data release. The euro then moved down to new lows, and as always with this US data, people will be asking me, how am I going to trade non-farm payrolls? And it's very difficult to trade non-farm payrolls, but what is much easier is to look at the relationship between three assets, and I do recommend you do this. I know we would have been talking to you guys about this at this time. Look at the relationship between gold, T-notes, and the euro dollar. So have a look at this. If I just bring up my gold chart at the same time, here's gold after the data release. Let's go to a 15-minute chart here on the euro US dollar, and I can show you sort of as it happened, and we can try and learn from this data release if you haven't done this before. Most of you with Amplify that have more experience would be doing this anyway. You're looking at the correlation between these asset prices in order to get a leading indicator for whether you're in the correct trade or not. And understanding these correlations and using these patterns can be a great asset to having to be able to exit a trade quickly should the momentum turn. Here you've got the same pattern, haven't you? So the euro moved eventually, really after the sort of first few minutes after that data, the euro started to move lower, and you can see that's at 130. We broke below S1. At the same time, gold's moving lower and T-notes moving lower, and actually it was T-notes that continued to stay underweight. You can see T-notes here at 145 making new lows, but by 145 the euro's beginning to recover somewhat, and by 145 gold still hasn't broken its S1 level actually. We then push lower again in T-notes and lower then again in gold, but it was really then looking at about 3 o'clock or 3:20, gold breaking above R1. At the same time, just about 5 minutes before, the euro pushing back up towards the pivot level. Yet that was the trade then, wasn't it? Because at 3:15, T-notes is still they're still quite heavily offered below S1, whereas by 3:15 the euro's trading back towards the pivot level, higher than where it was before that data came out. So if we're all thinking about where what the US dollar is doing here, then let me just place that on page. I don't know. Sorry, there's the three charts that I was talking about. So euro dollar, gold, and T-notes. So it was euro dollar that bounced back first, back up to that pivot level, and then gold and T-notes shortly following suit. So a really mixed picture of non-farm payrolls, and as always, the way to trade it is to really have two halves, whereby one opportunity will be from 1:30 to 2 o'clock on that first part of the data, on that first volatility after the data. If you really do get something out of line, there can be quite a decent move, but as long as you're looking at the correlation between those assets, if you haven't been able to do anything in that data piece, then wait till the cash open at 2:30. Cash open at 2:30, you might have momentum, you might have a bit of confirmation over where this market is seeing non-farm payrolls going. But as always with non-farm payrolls, trading later onto the day does seem to create some headaches for traders. So I hope you got on okay. It's an interesting picture. It should overall, on that wage price inflation, allow the Fed to be a little bit more hawkish, but you can see if you look at where asset prices stand now, there's still a lot of confusion over can we actually do anything with this data given the impact of the hurricane and how that's impacted itself, the collection of data. So it might be that we have to wait for next month's revision. However, this week, as you can see from the calendar, although today is quiet, so just as a reminder guys, today is a holiday in the United States, okay? It's a Columbus Day holiday. What does that mean? Fixed income markets are closed. So you're not going to be able to trade bonds. You'll see those markets almost dead today. In fact, if you look at some of your charts, you'll see very little movement in US fixed income products, but equities are open. Having said that, if fixed income markets are closed, it might be, and it's likely the case, there's a lot less volatility. So those of you guys here with Amplify, you're going to be having your mentor reviews. Those guys in stage 2, I've got to get to you today, and I will do on feedback on the points that you sent me by email. It's a good day to catch up with what you did well last week, what you did not do well last week, and how you're going to prepare yourself for the week ahead. But in terms of actual action today, it might be relatively muted. The main figure this week will be Friday. Okay, so Friday is probably the most important data of this week because we're getting US CPI. Now this comes after PPI earlier on in the week, and we got the Fed's Evans speaking about monetary policy on Wednesday, as well as the PPI on Wednesday, of course. But it's actually the inflation data on Friday and CPI that's going to be most interesting. But because if this comes through stronger than expected as well, let me just share my sheet with you here. For those guys in house, I've printed this out. I'll put this on your desk in a moment. It's the CPI coming out on Friday that we're really interested in, because if this comes out stronger than expected as well, especially the core figure excluding food and energy, then I think the dollar weakness picture that we've seen over the last few months, that trend will really be in full reversal. Think about what impact that's going to have on commodities, and perhaps if it's going to put a headway in terms of where equity markets are going to be going as well. One thing to think about with this CPI data, by the way, is just the delay. If we are going to start to get inflation, I mean, this headline wage increase was the highest since June 2009, by the way. So if we're now going to start to get there's a delay between economic growth and recovery and inflation. There is a lag. It's like a turning ship. And what I find interesting is I'm going to be really interested in now the pace of change in the inflation data. Because what you don't want as a central banker, and the Chinese call inflation the tiger that gets let out the cage. What you don't want now is all of a sudden a raft of much stronger than expected inflation data, because that then puts the pressure to really put the brakes on the economy, which then in itself disrupts the recovery, the continued recovery. So this inflation data, I think, and the path of the dollar is going to be incredibly interesting. If the inflation data does start really picking up, by raising interest rates, that's not going to cap inflation for now. There's always a delay. It's going to take time, and we might find the Fed have somewhat of a headache. And as you can see, we've got a really busy week coming up. Tomorrow, data out of the US in terms, well, we've got Fed speakers again. Out of Germany, we've got industrial production. Then we go on to Wednesday, of course, for the Fed and PPI. Then we actually start with the banks in the United States. They start reporting. So we've got earnings season once again. We'll see how well the banks have done on Thursday and Friday out of the US. At the same time, we've got Draghi speaking, Fed's Powell speaking, and out of the UK, the Bank of England credit conditions. Then Friday is, of course, the big day data-wise. So I'm glad to see a busy week, and hopefully this can give us some direction on monetary policy. Okay, what else is going on in the markets at the moment? Well, we still, of course, got the geopolitical events that have been driving, well, they haven't actually been driving market activity that severely, to be honest. Catalonia, what's going on in Spain? Well, the euro finding a bit of support yesterday and perhaps finding a bit of support over the weekend. I guess it's like, how can I describe it? I guess it's like, imagine if you're going to take a running jump off a cliff, which is perhaps what you could describe Catalonia's stance last week. If you're going to take a running jump off a cliff and then you stop just before you get to the end and you stop and stutter, it's now much more unlikely you're going to take that leap. And it feels to me that's what Catalonia have just done. They were taking a running jump and they've just stopped. They've just stopped to think about it. And now they're thinking about it. The momentum of that running jump seems to have been delayed. Huge protests over the weekend. Pro-unity population in Catalonia itself, saying I am Catalonian, I am Spanish at the same time. So it looks less likely that there's going to be that sort of break at the moment in Spain. So we'll keep you wired, of course. What's going on in Brexit? Well, I don't know if anyone watches the show in the UK. There's a great show on the weekend called Have I Got News For You? And it really takes enjoys political satire. And Theresa May's speech, I mean, just the humiliation again that's coming through there. It's such a disaster. It looks likely that she's going to demote Boris Johnson now in order to show that she's got some power. But the fact she's doing it after she's been asked to do it doesn't really shout to me of power and confidence. Listen, the Conservatives like power. They like to stay in power. They like to win. And I think as soon as there's sign of a weak leader, if you go back through the Conservative history, they get rid of a weak leader relatively quickly. I'm willing to take anyone who wants the other side of the bet. She will not be here come 2018. I don't think that can happen. I think they will force a replacement. As long as you have a leader where there's absolutely no confidence, then you can't support it. It's just not viable. Oh, here we go for the odds on who's going to be next in power. It's interesting, actually. One of my comments after the referendum, after the failed vote that Theresa May did recently, and people reacted by voting against Theresa May, giving Labour quite a big boost. my response was, well, everybody has now just guaranteed Boris Johnson will be our next Prime Minister. That's what that vote has done, and it looks like that's the way. I don't know about you, but I kind of half vomit in my mouth when I look at the top three options here. And this is speaking as a Conservative. We've got Boris Johnson, David Dacey, Jacob Rees-Mogg, Green, Amber, Red, 8-1, Philip Hammond. Yeah, that looks like the worst party that you could ever be invited to. Definitely not something that I would like to be part of. So not too enthused by the potential for people to come. What if she sacks Boris beforehand? Inga's asking. Inga, I don't think it matters. If there's then a leadership election, he will get, if you like, he'll be allowed to put his name in the hat. This is the problem with her demotion of Boris Johnson, is it's like having a really, really difficult kid in your class, and in order to stop him disrupting the other students, you sort of send him to the back of the class. Well, actually, that's where he's going to cause the most trouble. It's impossible. It's an impossible situation. She has no power, and there's no chance she'll be here. In my opinion, 2018. If anyone wants to take the other side of that bet, I'd be quite happy to do so. Okay, let's have a look at oil. Oil's actually come off somewhat, as it looks like Hurricane Nate isn't quite severe. Swap charts, thank you. Hurricane Nate isn't quite as severe as expected, and oil has come off from 51 down to 49 over the evening session. There isn't going to be such an impact on supply. Okay, so that's what's going on there. With gold, gold's coming, well, gold's had a bit of a rocky ride. It's interesting seeing where gold is after the non-farm payrolls. This was the initial sell-off after the wage inflation data. We've covered, going back towards the 1300 handle. To be honest, I know we talk about gold quite a bit. It's directionless, I would sum it up at the moment with gold, and it's quite dull. There's many other things and other assets to invest in. I think gold is still good as an intraday play, as an intraday trade. I still do have an interest in being long gold. Well, effectively it's short the pound, to be honest, but you know, this has been now sideways since when is that? Well, since the start of the year, really. If you look at gold since the start of the year, that's a pretty unexciting trend, isn't it? March, April, May, June, July, August, buffeting between 1300 and 1200. And while, as long as we stay below 1300, then I think we're more likely to hit 1200 than the 1400 target. And there is some tension coming out of North Korea and Donald Trump's tweets again, but I don't know, does anyone really care? There's also tension coming out regarding Turkey. Turkey have arrested a US citizen, and now the US are piling on the pressure. The Turkish lira, you can see here, this is the US dollar against the Turkish lira that I'm showing on the top chart. The Turkish lira fell almost 7% to an 8-month low. So in a response to the embassy employee being arrested in Turkey, the US now has blocked the processing of most new visas in Turkey. And not to be too, you know, doom and gloom about this, there's a lot of feeling to me about, I don't know if anyone knows about their history before the First World War, when you had all of these tensions in different areas of the world. Of course, Turkey have a real headache from their point of view of what's going on with the Kurdish population that spans across Turkey, Iraq and Syria, and how they want an independent vote on an independent nation. Of course, at the same time, you've got what's going on with Brexit and Spain, with China and the South Sea Islands, with the US, with Trump and North Korea, Saudi Arabia and Yemen. All at the same time, there's these tensions going on and allegiances being swapped and made and replaced. It does feel very global to me in its reach, and based on that, actually it's quite an interesting review in terms of, you know, listen, here we go, a series of political hotspots keeps investors cautious, says the FT as the headline markets news. I don't know, are investors that cautious at the moment? Looking at equity valuations, do you think, I'm not sure if investors are overly cautious in terms of exposure to risk, but definitely you've got political hotspots still remaining, and it's just one-off behavior. In my opinion, it really is. As long as we collectively decide that these type of political tensions will not have an impact on risk assets, then they won't have an impact on risk assets. But I'll be watching the Turkish lira today, certainly. In fact, I mean, this is crazy. In not very long, the Turkish lira has halved in value against the United States dollar. So that's definitely quite an interesting currency to follow. Also interestingly, actually, as some of you know, I was in Mexico the week before last, is looking at the strength of the Mexican peso. Since the start of 2017, been one of the best performing currencies. And let's have a look at the currency indicator here. Obviously, it did take a big dip, but a 30% rally in the Mexican peso this year against the United States dollar. All right, it's from a very low base, but that's still an incredible move. What about the pound? How about more of your trade? It's interesting how we have sold off. I mean, this is a phenomenal move in the pound, really. Talk about the currency to trade. You know, look at the opportunity here in terms of how we've seen these swings in the valuation of the pound in just 1 month. In 1 month, the pound has moved from, you know, the 128 handle, below the 128 handle, all the way up to almost 138. Now, this is one of the world's largest and most frequently traded currencies, having a 7% swing higher and a 7% swing lower. It's absolutely phenomenal in terms of the volatility we're getting here in the pound. We're below the August high. We're heading back down towards the 130 handle. Now, should there be a call for a leadership election from the Conservatives, I mean, it's just so much uncertainty. I don't know about you guys looking at us here from other countries. A lot of the Amplify guys, I know you're not from the UK. I just want to know, if I could put you guys to a vote, how many of you are the first 2 words you think of when you look at what's going on in the UK political arena? Are the first 2 words you think of strong and stable? When you look at what's happening in UK politics, is strong and stable the two? Well, I mean, it's a complete mess. But not only is there no viable person other than Bojo to take over the leadership in the Conservatives, and he's a complete disaster. You know, just last week he was saying Libya could be quite nice actually once you've cleaned up the dead bodies. This is the foreign minister talking about conflict war zones in that way. It's such a disaster. If you look to the left, I mean, okay, Labour sort of are rallying behind Corbyn now, but I mean that's an incredibly divided party. You know, you've got the 2 leaders of the Labour Party openly saying that they're socialists, and in the same party you have people like Chuka Umunna, who's absolutely pro-business. It's an incredibly divided party, both to the left and to the right. So you know, I'm a great patriot of Britain. I love Britain. I feel very British. I always have done, and I'm aghast at what we have decided to do to ourselves. The second and third words stand and stable. Okay, strong. The 2 words were strong, and the second word was stable. Picking on me there. All right, guys. Well, listen, today is going to be relatively quiet, so do bear that in mind in your trading strategy. Your mentors will be giving you your reviews, of course, and recapping on last week. Don't forget to go through Cobb's learning cycle. Remember, experience. What did you experience last week? Review. How can you reflect on what you did and what action that you took? Conclude. What can you do in your trading strategy to improve your performance? Are you able to take risk off the table earlier? Do you trade too much when markets are quiet? Do you take too much risk when you're in a losing position? Review it incredibly honestly, and then finally make sure you implement the advice that you give yourself. That is the absolute key. Guys, that's it for the morning briefing. I wish you all the best. Have a fantastic week. It starts off quiet, but it's going to get busy, and I look forward to seeing you in the room. Thanks a lot. Take care.